Right, welcome everybody, and today we have a very eminent personality, Mr. Anirban Mukherjee. And today I thought it would be a wonderful opportunity to understand a very interesting concept called the employer-employee insurance scheme. But this has been prevalent for a quite some time now in our country. But over a period of time, what has been realized is that there is still some ambiguity. So I thought this would be a wonderful opportunity to hear it right from the person who has had a very, very deep understanding and experience as far as employer-employee scheme is concerned. So hope this video helps every one of you who will be watching, and going forward we are really very positive about this particular opportunity. So welcome, Mr. Mukherjee.
Thank you so much, Arindam. Thank you so much for your kind words. Thank you.
Yeah. So I'll straight away hunch into the first question of the day. What exactly is this employer-employee scheme, if you can help us understand?
See, what happens is that when an employer takes an insurance policy for the life and on the life of its employees, it is known as an employer-employee scheme, right? So just to repeat, an employer taking an insurance policy on the life of its employees is known as an employer-employee scheme.
Correct.
Right? Premium on such policies may be either paid directly by the employer, okay, or by the employees also at times. That's how we define an employer-employee scheme.
Okay. So who all are involved in such a scheme?
See, first of all, let me tell you that employer-employee is not any insurance product. Okay. It is a particular arrangement between the employer and the employee. Okay. So now the parties which are involved in this particular type of a scheme is number one, the employer. Number two would be the employees, and obviously, as it goes without saying, that the insurance company will also be there who would sell the product.
Of course, yes.
Now, as I told you that it is only a scheme and not an insurance product, so any products can be given under this scheme. Okay.
Right.
Only two products we are not able to give under this employee-employee scheme is one is any kind of child products. Any kind of child products and any kind of pension products.
Oh, I see. Okay, yes.
So pension and child, I repeat, are two products which you cannot offer under this particular arrangement.
Okay. So what I get to understand from you, Mr. Mukherjee, if I'm not wrong, is that employer-employee is not a product. It is essentially an arrangement between the employer and the employee, and there are three parties involved in it. One is the employer, one is the employee, and the other is the insurance company, which is helping with the product. And there are limitations of product in terms of we cannot afford offer a child plan or a pension plan in such a scheme, right?
This arrangement is only possible because the employer has a principle of insurable interest on the employee as well also. So since the employer has a principle of insurable interest on the employee, and these are very intelligently designed plans which create a win-win for both the employer as well as the employee.
Correct. So while we keep on using these words employer, employee, could you please help us understand who exactly will be defined as an employer or an employee, if you can elaborate?
Basically, an employer can be anywhere ranging from between a private limited company, a public limited company, a partnership, a proprietorship, a trust, a society. So anywhere where employees are gainfully employed, that stands to be an employer. So employer, I repeat, can be a private limited organization, can be a public limited company, can be a partnership, can be a proprietorship, as well as any trust or society. That's an employer. So if I talk about an employee, employee necessarily, as we all understand, employees of organizations, but they need to fulfill certain basic criteria. Number one, they should be drawing monthly salary from the organization. They should be getting salary slips or form 16s from the employer. Ideal computation showing income under the head of salary. That qualifies him as an employee, and bank statement which shows salary credit for that employee. These are the prerequisites where we can consider that yes, he is really a rightful employee of that particular organization.
Correct. And I guess the salaried individual has to be salaried under section 192 and not 194J, if you can explain.
Yes, that is a very technical subject. We always have that At times, directors are also the employees of the salary.
Okay.
But the remuneration that they take from the organizations are put into two different heads. So once the remuneration is put under the section 192, it is considered to be a proper salary which the directors are taking, and we can consider in this case that he is a absolute rightful employee of the organization as well also.
Okay.
However, in certain cases, directors are appointed and they take consultancy fees. Although it is shown in the profit and loss statement as a remuneration paid to the director,
Yeah.
however, the section that they take under this consultancy payment of consultancy fees is 194J.
Okay.
While any company shows and pays a remuneration which is in term a consultancy fees under section 194J, that is not considered to be a salary paid to an employee. It is a consultancy fees. Hence, in such a case, we will not be able to consider that gentleman as an employee of the organization. So I repeat, 192 head is allowable under salary and we consider the employee as an employee. 194J, where we pay consultancy fees, although remuneration is being paid to the employee, in that case we would not be considering this as a proper employee.
Okay, so as we get to understand, if the particular individual happens to fall under 192, he is eligible for this particular
Right.
scheme. Else, in case he falls under 194J, he will not be eligible.
Absolutely.
Right? Okay. Now, let us be a little more realistic, Mr. Mukherjee. Like one employer having several employees, and the employer is receiving all the services from the employees, and in lieu, he is actually paying the employees a salary, right? Under 192. Why would an employer would go out of his line and then buy such an arrangement? If you could help us understand.
See,
that's a loss to the employer, right?
I will tell you why the employer agrees to such an arrangement. Number
Okay,
one.
yeah.
So before we move ahead, let me tell you that the life insured in all such cases is the employee. Okay. So
Okay.
the employer proposes the policy in the name of the employee, and employee is the life insured, and the employer is only the proposer to the policy. Right? He is the
Okay.
owner. He is the
Okay.
owner of the policy.
Okay.
There are two types also where we have option A and option B, where the
Yeah.
employer pays the premium, okay, and is the owner to the policy, and the life insured is only the employee. On the other cases in option B, what happens that the employee is the proposer,
Okay.
employee is the life insured, but the employer pays the premium on his behalf. So there are two options. We will come to that while we will discuss in
Yeah,
this
yeah,
interesting
yeah,
concept.
yeah.
However, as you told that why the employer, what is the benefit to the employer, why
Correct.
will he agree to such an arrangement, is solely because this is also utilized, this scheme is also utilized by the employers to get deferred benefits to the employees. Now, why do we get deferred, why do we want to as an employer to give deferred benefits to the employees, is that it acts as a great retention tool.
Oh yes.
Just like gratuity, if you, I'm sure that you must be knowing about gratuity and about the employees.
Yeah.
The way they look at gratuity is that the moment I complete a 5 year in the organization,
Right.
I am able to get that gratuity amount which was there.
Correct.
However, if I leave the organization before 5 years, I am not eligible to get that gratuity amount. Now, in such an arrangement where employer-employee also happens, suppose the policy which the proposer, I mean the employer, is taking on the name of the employee, it is also to be assigned to the employee at a later date. Suppose we make an arrangement that this employer says to the employee that yes, I am taking a policy for you, however I am paying the premiums for it also as well. However, I am going to assign this policy after 3 or 4 years to you.
Okay.
So that acts as a deferment period.
Yeah.
For example, let's assume that an employee was thinking of leaving the organization. Okay. Now he would think that yes, I am seeing a deferred benefit which is going to come to me after 3 years. So why not stick for another 2 years in the organization and take the deferred benefit before I decide to part ways with the organization.
Correct.
Similarly, what happens, we have seen that for bonuses, bonuses get paid to employees. It's a fact of life, although it's not very correct. I would not want to say correct or wrong. However, it's a fact of life that the moment the person gets the bonus, we have seen tendencies among the employees to leave the organizations just after they have got the bonuses,
yes,
right?
yes.
That's okay. So for an employer, it's a win-win situation that you give the employee something which the employee also holds in great esteem about you. Yes, my employer has thought about me. He's thinking about me, for my family, for my life, for my benefits, and he is giving me a time of around 3 to 4 years, after which he will pass on these benefits to me. So for an employer, number one, it is employee retention. And the most important thing that the employers look forward to for this kind of a scheme to help them out is to plan their tax. So all the premiums that they pay qualify under section 37(1), okay, 37(1) of the Income Tax Act, and as per the CBDT, Central Board of Direct Taxes Circular number 762, it qualifies for exemption and rebate under that section 37(1), where you can claim the premiums paid towards this arrangement and scheme under section 37(1), and you can claim that as an expense, okay, and your profits reduced, and the amount of taxes that you need to pay on your profits actually reduces, so it eases out the tax burden of the employers to a great extent.
Okay.
Right?
So just to again understand once in a nutshell is that the employer pays the premium, the life assured is the employee, whatever premium is being paid by the employer gets deducted as expenses under section 37(1).
That's correct.
Which the company enjoys.
Correct.
And at the same time the employee also feels more loyal. He happens to extend his services and the service period with the organization.
Absolutely.
Right? Okay, so Mr. Mukherjee, since you mentioned during your discussion that there are various types of employer-employee insurance arrangement.
Right.
So could you please help us understand what exactly are the types?
Just in a nutshell, let me tell you, there are two options. One is scheme A, one is scheme B. In scheme A, what happens? The employee is only the life insured. I repeat, in scheme A, the employee is only the life insured.
Okay.
The proposer or the owner of the policy is the employer. The premium payer is the employer. The beneficiary as well as the policy owner, as I told you, is the employer. The employee is only the life insured. While in scheme B, as we understood about scheme A, let's understand about the scheme B. In the scheme B, the premium payer is only the employer. If I talk about the proposer or the owner of the policy, it is the the employee. If I talk about the life insured, it is also the employee. If I talk about the beneficiary, it is also the employee. The policy owner is also the employee. So employee is everything in scheme B, while the employer is only the premium payer in such an arrangement.
Okay.
Right?
Okay.
So that's scheme A and scheme B for us.
So as you said that this type of policy is being taken by the employer for some sort of benefit to the employee also. So as a proposer, the employer always will own the policy. Will there be any period when the employer actually passes on all the benefits to the employee?
Yes, obviously, because otherwise then the employee will not benefit from such an arrangement, right? So why, if the employer is taking the policy in the employee's name, there has to be a certain date where the employer will pass on the benefits to the employee.
Correct.
Now that happens by means of an assignment. In technical terms, in insurance, it is known as an assignment. So what happens? In assignment, the policy rights gets transferred from the owner to the other person. In this case, since the employer is the owner to the policy, he will have to pass on the rights to the employee for the employee to take the benefits from the policy. Now that happens in case of an assignment. There are two types of assignment. One is a conditional assignment and one is an absolute assignment. Conditional assignment is something to do with a particular condition. Should this happen, then only the policy will get transferred. And an absolute assignment happens that on this day, I transfer the entire policy ownership to you. Generally in this insurance employer-employee schemes, it is an absolute assignment which takes place generally. Now there is no hard and fast rule whether I should do it in the first year or after 3 years down the line or probably just before the maturity of the policy. It depends on the arrangement of the employer and the employee. How long the employer is wanting to continue, how long the employee is wanting to continue. It is absolutely arrangement between these two parties, understanding the mutual benefit of both the parties, that they would decide which date they would want to make the assignment. But once the assignment is done, it cannot revert back to the assigner, that means the employer. Once the assignment is done, the employee becomes the sole owner to the policy, and any benefits after that date accruing under the policy absolutely will be received in the hands of the employee.
Okay, so that immediately springs a question in my mind is like, what if the employee passes away or even resigns from the organization during this?
That's a great question, Arindam. I think this is a very pertinent question, and a lot of queries come on this particular field. Now, what happens if the employee, let's talk about in case of death, okay? So, in case of death, while the employee happens to pass away and the employer has not yet assigned, so there are two conditions. One,
Right.
assignment has happened, and the second, assignment has not happened. So, in case assignment has happened, the policy benefits reach the legal heir or the nominee of the employee, because
Okay.
now the employee, after assignment, the employee has become the sole
Owner.
owner to the policy.
Correct.
Now the ownership, since it has got transferred, now the money will only go to the employee, either the nominee or to the legal heir of the employee. Okay, and this is absolutely a tax free proceed in the hands of the employee or the employee's family.
Correct.
Right.
Correct. Okay.
In case of pre-assignment, suppose assignment has not happened,
That's right.
and the employee has passed away, generally what happens that the money comes to the employer, because the employer is now the owner to the policy. It comes to his books as an additional income for that year, but again it gets nullified because he also pays to the employee this amount to the employee's family as an ex gratia. So a
Okay.
positive entry and a negative entry nullifies the effect in his books, so he is not taxed on anything because he has got the benefits, I mean the amount, and he has transferred the amount to the employee's family.
Okay.
So it is not taxable to anyone in that particular situation.
Correct.
Similar situations can happen if the employee has resigned from his services.
Correct.
So after assignment, resignation, the entire amount of money, the employee is free to continue the policy till the policy term. He can pay the future premiums if at all they are yet to be paid, and whatever benefits accrue comes to the employee.
Correct. Correct.
If the resignation happens before the assignment has happened, now since the employer was the owner to the policy, entire benefits the employer can surrender and take it in its books. But in this case, the amount which is received from the surrender value of such an insurance policy, the employer is that amount is treated as an income in the employer's books for that particular year, and it's get added to his income and needs to pay tax on that.
Correct. Correct. Correct.
Right?
Right.
So these are the two implications in this case.
Okay. Okay, Mr. Mukherjee, one more question that comes to my mind here is that at the time of assignment, that as you said, transferring the ownership of the policy, or at the time of maturity, all the maturity proceeds will be accumulated in the accounts of the employee. Will the employee be taxed in both these cases?
Yes, if you talk about when the assignment happens, we have generally advised the customers basically due to the requirements. Okay,
Yeah,
we have understood the needs, we have understood the requirements of customers, and we have advised them at times to surrender the money, surrender the policy. I mean transfer the policy in terms of assignment from the employer to the employee immediately on the third year for traditional policies, because on the third year what happens? This assignment value is actually the surrender value which the employee books takes on them. That means when the employer assigns the policy, it is basically on the surrender value.
Okay.
It goes to the employee.
Okay.
Because if the employee today wants to surrender and take the value, it will be the surrender value which the organization is going to give.
Correct.
The insurance company.
Correct.
So his books will only be added to the extent of the surrender value of that policy, and it is generally about 1/3 of all the premiums that has been paid under the policy on the third year. So it is the lowest in terms of surrender value on the second or the third year. However, it is a taxable thing because it is treated as tax under the perquisite's head, and it is taxable in the hands of the employee. This is once it happens on assignment. Okay.
Correct.
Now, suppose the assignment has happened and the policy has matured after about say 5 or 6 or 7 or 10 years after that. On the date of maturity, it is again a taxable amount which comes in the hands of the employee. However, having said that, there are a lot of interesting combinations which can happen, and where the employer and the employee can benefit in a many varied occasions and ways.
Okay.
So it is really advisable to open up calls, go to a particular employer and an employee, sit with them, understand their needs and requirements, and when they want to assign, when they want to take the surrender, do they want to really take the surrender or not. So a lot of interesting combinations and useful and helpful tax implications can be garnered and arrived at depending on the need of the hour. Okay,
Correct.
so I would request everyone to just start opening calls, which will give us more insights about how this can be tackled, and which is a win-win situation to repeat for both the employer as well as the employee.
Correct. So that's a message for the sales team. In order to understand this particular subject, while this video might be of great help, I am sure, but it is also very advisable from Mr. Mukherjee himself, is that we got to start opening calls so that many such interesting combinations, as rightly said by him, will be coming up to you, and maybe then you can carry forward these discussions further with your training team.
Absolutely.
Locally available, and then get to understand more, right? Okay, so what we have understood about employer-employee was tremendous. That's what my experience has been today, Mr. Mukherjee. Could you please, for our audience and viewers, help them have a bit of a summary of today's employer-employee available currently in the market?
Yes, sure, for sure. See, an employer takes an insurance scheme on the name of the employee because he has insurable interest on him. It is also social service, it is also a great retention tool, and it's also a tax saving and deferment tool for the employer. Okay. Having said that, these are the three very, very important reasons and very strong reasons why the employer takes an employer-employee scheme on the name of the employee. The employer pays the premium, maybe for the entire term of the policy, maybe for a particular duration of the policy, and then assigns the policy to the employee. Before the assignment, the owner was the employer. After the assignment, the owner becomes the employee. Now, before assignment, if any amount comes to the employer that is taxable in his hands, in case it is a death benefit, he can pay to the relatives, or I mean the nominee or the legal heirs, and there is no tax implication on him because he has not received any money in whatsoever. In case of death also, the employee receives the entire amount, which is absolutely tax free to his family, okay, and it is not taxed. In case of resignation, I told before assignment and after assignment. Before assignment, anything which comes to the employer is taxable in the hands of the employer in terms of his income, okay, and he's taxed on that as per his slabs, okay, in company slabs, which is around 33%. And in case the employee resigns after the assignment date, it is his policy. Whatever he needs to do, he wants to do, either he wants to surrender, he wants to take the policy, pay the premiums and take the policy maturity on the dates of maturity, that's entirely up to him. But any policy money which comes to him at maturity is taxable, okay. But as I repeat myself, there are interesting features of this policy we can arrive at a very win-win situation for both the employee and the employer. It is also seen that it was asked to me in several other occasions that what is the minimum strength of employees that can be, that can opt for under this scheme in terms of employer-employee. So there is no minimum limit, okay. Even one employee can fall under the employer-employee scheme. There has been instances where there is a private limited company and there are directors of the organization, okay, and their employees also, they are drawing salary. So this private limited organization also can, propose policies in the name of its directors, and a very interesting, scenario comes up in that as well also, which again depends, as I told you, on a case-to-case scenario, which can be a really, really win-win situation for the employer as well as the employee, for the company as well as for the director who is also an employee and drawing salary under section 192, if you remember that we discussed in the beginning of the program. Okay, so that's in a nutshell is about employer-employee. The employer takes an insurance policy on the employee, and it's really, really win-win. The employee gets help by the employer to create his corpus. Maybe it can be for his legacy plannings, it can be for his retirement, it can be for the protection and wealth creation of his family as well. Retention tool for the employer, a great tax saving opportunity for the employer, and also at times a deferment of tax as a tool which this can be used as, okay. So that I think summarizes the employer-employee scheme in a nutshell.
Thank you so much, Mr. Mukherjee. Could you please help us, throw some light on the documentation that might be required in such an arrangement?
See, documentation, as I told you that for the employee, he is alive to be insured, okay. Now, date of birth proof, KYC, okay, form 16 or salary slips, okay, and also at the end an authorization letter by the employee in our format, Exide Life Insurance Company's form, that yes, I am intending to participate in this scheme, will be enough from the employee's end who is the life insured. Now, in case of the employer, since it's an entity, it's a company and it's an employer-employee, so to establish the employer employer status of that particular company, we would want the board resolution. We would have the rules of the scheme which would be there in the board resolution, profit and loss account, balance sheet, ITR copy of the last 3 years of the employer, and MOA, which is the memorandum of association, that has to be there. In case of a private limited or whatever is there, private or public limited company, KYC of the employer is also important, which is the PAN card copy, ID proof, photograph of the directors and address proof of the company, nomination form in case something happens to the employee, what happens to the nomination form is also important, and in case it is a shop establishment, the registration certificates are also required. And in case it is a partnership firm, the partnership deeds are also required, and with a complete breakup in terms of the percentage of share that the partners are drawing from the partnership firm, and an undertaking letter by the employer inform that yes, I intend to participate in such a scheme, and any other requirement which crops up due to the underwriting requirements as a case-to-case basis.
Correct.
So that's to summarize in terms of the documentations that we are required here.
So last question for the day, Mr. Mukherjee, thank you so much so far. Do you really think the current economic scenario today will be really congenial for such an arrangement to market by insurance companies?
I think it is a real important scenario which is there, and which actually boosts this kind of an arrangement, right? If I talk about the current economic scenario post demonetization, if you talk about new PAN card issuance, okay, that has happened, and it is around 50. It has increased like manifolds. It is around 15 to 20 lakhs per month. I repeat my statement: post demonetization, the PAN card issuance have been 15 to 20 lakhs per month. Okay. And a total of 12 crore taxpayers are now currently, with almost 5 crore new taxpayers coming into the entire fold. Okay,
that's a whopping number.
Yes, that's a whopping number. And if I talk about that, if you talk about the advanced tax collections, the people paying taxes in anticipation of their income which is going to get generated, has gone up by 35% in January 2019.
Okay.
So we are expecting by advanced tax collection, as the dates will nearby, like on 15th of June, 15th of September, we would still have a great jump. So 15th of September being the deadline for advanced tax payment, a lot of people will be there as a customer, as a prospective customer for us to go out and meet in the markets, who would be really appreciative of such a scheme where it helps them to absolutely plan their taxes well, right? So that's how it is.
Okay. So what would be your advice to the current sales team people who are trying to source?
There is no rocket science in this. Apart from the scheme is concerned, there is no rocket science in sales. How many people, how many prospects do I have in my pipeline will ensure the success of this. Because right time, loha garam hai, maar do hathoda, so right time to hit the anvil. As the saying goes, if you reach to customers, if you reach to the firms, the private limited companies, the directors of the companies, the public limited companies, the trusts, the societies, they are in a lookout to manage their tax better. So you are coming to them as a real person who is going to help them manage their taxes and plan their taxes better. So open up as many calls as you may.
Right.
Go to customers, visit your partners, okay, tell them about such an interesting scheme which not many are really aware of, okay, and take help from local training team of Exide Life Insurance in case you want to actually go and take their help and go and sell cases in this with this merit. So please go out all out, and let's make it a rocking advanced tax collection date before the 15th of September. Thank you so much for that.
Thank you so much, Mr. Mukherjee, for your precious time and advices and your inputs. I guess, my dear viewers, this would be a wonderful eye-opener as far as employer-employee scheme is concerned. This is a wonderful opportunity, as we understood rightly from Mr. Mukherjee, that there are many interesting aspects also which needs to be understood and learned, that can only be happening when we are actually hitting the streets and trying to open new calls and facing those objections and queries from the customers. With that, 15th of September happens to be a very crucial date wherein the advanced tax payments needs to be filed by all the institutional business holders, and hope you guys make the best of this particular video that we try to initiate, and good luck to all of you. Thank you so much for watching this video.